What are the tax advantages to investing in property in an SMSF? SMSFs provide greater flexibility when it comes to tax planning, which means that as the trustee, you can choose to structure and time your actions to pay as little tax as possible. This is a luxury that other superannuation funds simply cannot offer. However, for an SMSF, the taxable income cannot be determined until the tax return is prepared and lodged. This means that the contributions can be invested until such time as the taxes are due, which means that you have more money invested for longer and before the tax is ultimately paid. Contributions into the superannuation fund are considered as income for the fund and as such are liable for tax at a concessional rate of 15%. For retail and industry superannuation funds, the tax has to be deducted from the contributions before the money can be invested. There are significant tax benefits when you reach retirement. An SMSF provides an advantage in the form of being able to hold off the sale of an asset until retirement so that you can gain significant capital gains tax benefits. For example, if you purchased an asset such as an investment property before you retired for $400,000 and then you sold the property after you retired for $600,000, you would not have to pay any capital gains tax provided that your balance of your fund is under $1.6 million. This means that the entire capital gain of $200,000 would be added to your retirement savings without paying any tax. An important note regarding capital gains tax in traditional superannuation funds. In other super funds, when you change from a superannuation account to a pension account, you may have to change trustee. When this happens, you're liable to pay capital gains tax. An SMSF does away with all of this because switching from a superannuation accumulation account to a pension retirement account does not require a change of the trustee, so there is no need to sell down assets prior to the rollover. What this means is that for most people, they can avoid triggering a capital gains tax liability. There are significant tax benefits that an SMSF has when compared with traditional superannuation funds. I recommend finding a good advice provider to help you with this process. To learn more, visit wealthseekers.com.au.